question number 1. Here you are asked to calculate current ratio and quick ratio.
So here we need to find out the current ratio, and we have the formula current assets by current liabilities. Now let's find out what are the current assets. Here the list of assets are given to you, assets and liabilities. Your current assets are stock, sunny debtors, bills receivable, advance paid, cash in hand, and all these are liabilities. So here you have current assets: inventory, sunny debtors, bills receivable, advance paid, cash in hand. Now we put the values here as given in the question. So we get the total current assets 1,34,000. Now we need to find out the current liabilities. What are the current liabilities? Here sunny creditors, bills payable, bank overdraft. These are the current liabilities. So here we take sunny creditors, bills payable, bank overdraft. These are the values here. So you have total value 1,04,000. So we substitute the value here. So here 1,34,000 divided by 1,04,000 gives you 1.29:1. This is all about the current ratio. Now we come to the quick ratio. Quick ratio, the formula is quick asset by current liabilities. Quick assets are those current assets which can be converted into cash immediately, right? So what are they? Sunny debtors, bills receivable, cash in hand. 1, 2, 3. So you have quick asset is current asset minus inventories minus advance paid. This will also be there. So you have 1,34,000 minus 50,000, whereas your advance paid is 4,000. So that should also be deducted here, minus 4,000. So you get total of 80,000. This is your quick assets. Now the formula quick ratio is quick asset by current liabilities. So this will be your 80,000 divided by 1,04,000 will give you 0.77. We take another question now. From the following information, calculate trade receivable turnover ratio. Cost of revenue from operation or cost of goods sold is given to you 3 lakhs. Gross profit on cost is 25%. Operating trade receivables, that is 50,000. Closing trade receivables, that is 1 lakh. Cash sales is 20% of total sales. Now what are you asked to do? Trade receivable turnover ratio. We have the formula. Trade receivable turnover ratio is credit to revenue from operation divided by average trade receivables. Revenue from operation means this is sales. So here you need to find out the credit sales. But the credit sales is not given in the question. Cost of goods sold is given to you and gross profit on cost is given to you. Taking these two, we will find out the sales, that is revenue from operation. And the formula for this is cost of revenue from operation plus gross profit. Cost of revenue from operation is as given to you 3 lakhs here. So 3 lakhs. Gross profit relation is given here. It is 25% on cost. So it is 25% on cost, that is 3 lakhs. So you have 3 lakhs. This one, revenue, cost of revenue from operation 3 lakhs plus 25% of 3 lakhs is 75,000. So you get 3,75,000. This is net sales or revenue from operations. After this we need credit sales. Credit sales means total sales minus cash sales. So total sales is this one, revenue from operation. Then cash sales, cash revenue from operation. Cash sales is given to you in the question, which is 20% of the total sales. So revenue from operation we have already calculated, which is 3,75,000. So here you have 3,75,000 minus 20% of total sales means this one, revenue from operation. So 20% of 3,75,000. 3,75,000 minus 75,000 you get from here. So you have 3 lakhs. This is your credit sales. Then you have the formula for divided by average trade receivables. Average. I have already explained to you. Average means opening plus closing divided by 2. So you have opening trade receivables, closing trade receivables divided by 2. Put the values, you get 75,000. So we go back to the formula. Credit revenue from operations 3 lakhs divided by the average trade receivable 75,000, you get 4, and this should be expressed always in terms of times, so it is 4 times. We have another question now. From the following information from the books of XYZ Limited, calculate trade payables turnover ratio. Total purchase 8,50,000, credit cash purchase 80,000, purchases return 40,000, creditors at the end of the year 1,20,000, bills payable at the end of the year 20,000. Now we have the formula. Trade payables turnover ratio is net credit purchases by average trade payables. How do we find net credit purchases? Total purchases minus cash purchases minus purchases return. So total purchases 8,50,000, cash purchases 80,000, purchases return 40,000. After subtracting you get 7,30,000. Here you get 7,30,000 net credit purchases. Net means after deducting the purchases return. Then you have average trade payables. Average means opening plus closing divided by 2. Here only one value of credit is given to you, only the closing value at the end, that is no opening value. Similarly, bills payables also opening value is not given, only the closing value is given to you. And when you talk about trade payables, both are included in the trade payables. Creditors and bills payable are part of trade payables. And since opening values are missing here, so you cannot find out the average. So whatever value given to you as closing value should be taken as average trade payables value. So you have the total 1,40,000. So 1,40,000. So when you divide, you have 5.21 and the answer should be in times, 5.21 times. Another one. Calculate working capital turnover ratio from the following. Current assets 9 lakhs, total sales 30 lakhs 50,000, current liabilities 3 lakhs, sales return is 50,000. Calculation of working capital turnover ratio. We have the formula revenue from operations divided by working capital. Revenue from operations, we need to find out the net revenue. We need to take the net revenue. Net means minus sales return. So here we have total sales minus sales return. 30 lakhs 50,000 minus return is 50,000. So here you have the value 30 lakhs which goes up here. Then working capital. Working capital is related to current. So we have taken current assets and current liabilities. Current assets 9 lakhs, current liabilities 3 lakhs. So we have 6 lakhs here which goes here. So if you divide, you get 5. So the answer will be 5 times.